Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 8th of May, 2018. Thanks for joining me. Bon après-midi and guten Tag. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market this morning, seeing red across the board, although we've recovered some in the indices. The dollar continues to show strength, up 0.44%, up 41 cents. But overall, Dow Jones is flat. The Russell's pretty much flat, down 1.2 points. Japanese yen, 10-year, pretty much everything is under zero. Crude oil down 64 cents, trading at 70.09 on a June contract. And yesterday, what looked like a news-based move this morning or this afternoon, we need to just bear in mind that the U.S. administration is going to be announcing their stance on the Iran deal and whether or not it'll be renewed. That's expected at 2 p.m. Eastern time. There's been some signaling already by the Secretary of State that the U.S. Is likely to withdraw from the deal. So if you are trading crude oil, you might see a quick move in there once that rumor is confirmed. So look for that. Other than that, really, we don't have too much to worry about this morning. We're getting the JOLTS job numbers at 10. Not seeing anything else in terms of big earnings or anything like that. So, pretty quiet day ahead in the calendar. Mostly it's likely to be driven technically, or of course news, always news. Yesterday, the market, the ES was opening just above the prior day's high, which was a week high at 69.50. We were trading around 26.72 at the time of the broadcast. The expectation was for the market the ES to drop into the prior day's range and balance. That did not work out because we found buyers immediately on the open, which takes us to scenario 2, also looking for a responsive down for a push into really 26.82 is the price that I'm looking for a retest on. If you recall, 26.8150, 81.75. Those prices have been tested multiple times and have acted as tops in the past few weeks. So the expectation is we're likely to retest that. Again, scenario 2 did not work out. Scenario 3 looked like it was in play. We had an open test up immediately, pushed through the overnight high. It did push higher than I had expected. But overall, I was looking for a place to sell on an immediate push higher for it to return into the range. And then the targets immediately on the return into the range is to close, is to get down into the prior day's closing price, which was around a 26.6375, and then potentially ride all the way down into the prior day's point of control, although the profile is blunt from the prior day, so really the point of control is winning by maybe a couple thousand contracts. So the expectation was for 26.4675 down. This is the scenario that played but did not have any range at all. So we immediately pushed almost in a drive-ish kind of behavior, and then we rotated back into the range. We were unable to find sellers to keep us down into 26.6375. However, later on it did manage to do that. Yesterday, there were not many bars. If you look at a Renko or PNF, you'll see that it really didn't have much in terms of activity. We did get the sell-off in the afternoon. Again, we almost got into the 82.75 stock zone. We stopped on the edge at 81.50. Again, that price, 81.50, where the selling began, and we went neutral on the day. The volume overall wasn't so great, but in this in this environment with us pushing highs, we don't expect volumes to be very high. We expect to grind up like we saw throughout last summer, the summer of 2016. So the volume at 959,000 is pretty light. Remember, London was closed, or the UK was closed yesterday. It was not participating in any of this. Volume was down by about 35%, 35 to 37% on the day, throughout the day. So the participation was pretty poor. Slim pickings yesterday. It did seem like we would get an open test drive, pullback to mid, continuation. That failed. And then once it started to fail into the prior day's range, I was looking for a retest of mid, consolidate, and then continue lower. That failed. So I finished the day down just slightly, a scratch trade, and took a loss on the next trade. But that's just part of the game. I mean, just keeping losses small is key until the market expresses what it wants. Then we push on the gas rather than coming in looking to push trades as hard as we can right off the bat. Remember, we're surfers. At the end of the day, we're surfers. We don't make the waves. We just do our best to detect them, seek the potential, and then paddle as hard as we can and try to ride the wave to the extent that it goes. So people tend to trade as if they're wave makers. We're not wave makers. We just ride. We're surfers. Okay. Maybe you're different. Maybe you have a huge fund. So looking at the overnight session, carrying over into the overnight session, very quiet Asian session, sideways until the Europeans kicked in. And then we had some selling coming in, and we just pushed through the low volume node right here, and the overnight mid and VWAP on pretty good volume. We just pushed some really decent volume on this push up. We were outside of the range for a little bit, yesterday's range for a little bit, and we're back in. We're basically balancing in the lower distribution of yesterday, basically where we closed yesterday. So not much was accomplished in the overnight session. The exploration down only pushed yesterday's low by 1.5 points, and that's it. Very, very quiet. Feels like summer almost. Feels like summer already these last couple of days. So the expectation is for this to continue, given the way it's pushed through, to continue back up. And the expectation is for us to open where we closed yesterday, which was at 26.6975. So that's what we've got in the overnight. Coming into today, we are starting to turn onto ourselves, which means it's potentially the start of a new MC, microcomposite. This microcomposite is likely to, so we're likely to roll over. We've trended up on this day. We've had a neutral day. We're starting to roll onto the prior range. So we're going to build a microcomposite and see what areas are key beneath. Currently 2635 is the dividing line. It is the neckline right here. It's the neckline, the low volume node. Let's draw a proper circle. A low volume node right there, or square. and this may start to roll onto itself and pull back to take back some of the buying that went on. The next level up is this 43 area. Is the 43 area, and so we have a little bit of confluence in these two zones here. The top is not ideal. So if you look at what we've done since the turn last week, late last week, Thursdays when we turned with a neutral up day, we have a point of control that's near the highs with a very blunt, very weak high, in my opinion. It does not seem to have found its sellers in a big way. We seem to grind our way up, and that's why the point of control happens here, and then we drop off so quickly. So it doesn't look to me like we have an excess high, or we've really pushed prices high enough to motivate sellers. This morning, I'm expecting us to get stuck here in this range somewhat. So this morning's expectation, key expectation, let's shift more to the left so we can have a little more room. So also another thing, last week's close, Friday 2663.75, yesterday 2669.75. We're just hovering around where we were last week. Last week's high 2681.75, yesterday's high 2681.50. We missed it by a tick. So basically what we have yesterday is a double top on last week. So again, likely to see that break through at some point. Not saying today, but overall, the buyers are doing a pretty good job of gaining ground and holding on to it. This morning, open auction in range. I'm expecting the market to roll over, test lower, consolidate at 62.50, and start pushing lower before we find our buyers, and then have our impulse up, push into 26.72, consolidate, and then the point of control at some point today. I'm expecting the market to be responsive this morning. Again, there is news at 2 p.m. Eastern, geopolitical. We'll see how that looks as the U.S. rhetoric goes on with Iran and with the cancellation of this deal. There's more risk to the global economy because just a lot of warmongers in U.S. politics right now. And Iran's the target. So that just creates risk for the market. If the U.S. pulls out, the expectation is we're likely to roll over because we're likely to impose sanctions again and all that stuff. The communication is likely to break down. So oil may have already priced that in, but we may see a pop in oil to 72. We'll see how that works. Oil's been an interesting trade lately. So that's the primary. Secondary, open auction, test higher, close the gap, impulse down, and then we start to move through our microcomposite, the main target being this low volume node marked by this stock zone at 49. That'll be the key target if we have more in us. Notice there's a block here. There are two stock zones on top of each other. Once we break below, I'm expecting it to have a hard time pushing through and above. And then if we are unable to, we may see the extended target of 43 to 43.50 below. Okay, so that's the selling scenario for today. So here we are. One of the things that I discussed the other day in the Convergent chat room that I really want to impress on everybody is that it's really important to just stay focused on the day. and to just look at what you're doing versus what the market is telling you, right? So let's avoid, it's really important because we're human beings. We have a very strong need to be predictive and so on. And we do have to predict to a certain extent we are trading probabilities. But at the end of the day, your outcomes are going to be random. A lot of what you do and what I do and what professionals do have a heavy hand and luck, and the only thing you can control is risk. And so as I watch people just completely implode because some amazing setup they have devised and did homework on and predicted that is playing out, they either came in late or the market's not moving to the extent that they like, they tend to defend. You start to defend as a human being your beliefs, your predisposition to a certain belief or bias. You start to defend that. In fact, you see that in forums on Twitter and so on. You get these two people arguing about why crude has to go up or should do this or should do that. And I can't tell you how dangerous that is to being a professional career trader, to hold that side. It is best to come in, the better mindset to come in with is, I don't know, but my bias is such and such based on these probabilities or this action. But it's important for you to come in to every trade. And just remember this. Every trade you come into, it is important to start with, I don't know what's going to happen. I never know what's going to happen. So when talking about trading, when discussing over dinner what the economy's doing and what's happening with the 10 years, what's happening with the dollar or crude or whatever, always start the sentence with, I don't really know. I can't really know what's going to happen, but here's my expectation. We're trading expectations, but it's important to start with the firm belief and knowing that you don't know beep. You just don't know. You don't know shit. You don't know what's going to happen next. There's no way for you to know. And you might get lucky. You might get 3 guesses in a row correct, and now you are the market master, and now you're going to get whacked by the market. And I have been in that position quite a few times, actually. So it's really important for you to just start with a baseline of, I don't know, but this is my bias, and because I don't know, this is what I'm risking to find out. I am paying, this is my ante to see the next poker hand. I have to put that ante up. That ante is my stop. And then the cards are the cards. They're going to play whatever they're going to play. There's just no way for a well-shuffled deck. There's just no way for me to know if I'm going to get the card that's going to help me win this hand. But I cannot play this hand unless I ante up, unless I pay up. You have to pay. You have to pay to play. This is trading. This is business, right? If you have a day job, you are paying up in time to find out how far you can take your career with this particular company, with this particular boss, on this particular project, doing this particular thing. You're paying constantly. And we do the same in trading, except in trading, people tend to at some point say, screw it, I'll do away with the paycheck and I'll invest my entire life. I'll invest the next 20 years defending the fact that this job is perfect for me, even if I'm not being paid, even if I'm losing time and money. That's essentially what you do when you fight the market. It is better to just say, I don't know, come in with that mindset, because you don't know. I don't know. My scenarios are based on the fact that I don't know. That's why there's so many of them. And then we look for clues in the market, the opening type, where we open, which side is playing what, how the delta is moving with price, what is the opening swing, what have we done with the initial hour, which is the initial balance. Have we pushed one side or another? And so on. Those things help clue us in, but we still don't know. Accept it. The The money that you make in trading is just an accumulation of experience built on hopefully probabilities. The experience part cannot be understated, but the outcome is unknown. You're playing a game where luck has a heavy hand, because I can place things exactly the way I made money last time, this exact same setup, but I might lose money. And just accept that for what it is, and stop trying to fight the market. It makes no sense. It makes no sense for you to sit there and go, this has got to work. This trade has got to work. Because the baseline is, I don't know. Okay? Just remember that. It's an important thing to bear in mind, that ultimately the market decides, and it is pretty much random in its outcomes. It's not a random market, because someone could argue, hey, if I had invested $1 or $1,000 a long time ago, I would have received a rate of return of 8% over the last 40 years or whatever. That's true. There's a skew to the market. I'm not talking about the overall market. I'm not talking about randomly trading a trend. I'm talking about the outcome of the very next trade being random. It is really luck. Okay? Good luck.